Hello, Wolfpack. We're back in business here with Bitcoin. Wow, we've fallen very far in the last 24 hours, I can tell you that much. We've come all the way down to the bottom of the ascending channel formation, which is very interesting because, as we know, and this is what I was talking about yesterday, the ascending channel formation is essentially, not quite, but it's essentially on the macro uptrend support line. And so if we lose the channel, we wouldn't quite lose the macro support line. As you can see, we still have a little bit of space in between, but we would come very close to it. Let's zoom up to the daily chart. Now, for let's go to the let's go to the daily chart. Those of you who know, the macro support line, the macro uptrending support line is essentially a line on Bitcoin that is stemming about an 11-year period. So this line here, this bottom line, I'll make it a pink line so you can see it, is an 11-year long support line on the logarithmic scale. Very, very big support, right? And as you can see, if we lose this bear flag, which it is a bear flag, and hence we can assume we're going to lose it sooner rather than later, 70% chance, right? We can assume we're going to lose that. If we lose this bear flag, or we shouldn't assume it, but we can say it's likely. If we lose this bear flag, we will actually be coming down to retest this macro uptrending support line. And hey, look, if we lose the bear flag and we take a target, let's not even take the target from the flag itself. Let's take the target from a channel, just be conservative. You know, we can see that there's really no reason why we shouldn't lose that macro uptrending support line. And so if we lose the bear flag, we're very much likely to go down below that macro uptrending support line for Bitcoin. And then where would we go from there? You know, where do we bottom from there? And I've said this yesterday, and I made a Twitter post about it. So I just want to be clear here. I think that Bitcoin is going to be seeing a Q4 bottom, right? So if we go to, for example, the 4-year cycle chart, which is what I based this on and what I've based it on since November last year, because this is what I've been saying for almost a full year at this point, right? Since like 63K, I've been saying this. Essentially, what I've been saying is, hey, look guys, there is a date range trend on Bitcoin. That date range trend is called the 4-year cycle theory. It's triggered by the halving. And if we extrapolate the data by taking heaps of measurements from top to top, bottom to bottom, top to bottom, and bottom to top, we can extrapolate that data and predict when Bitcoin's going to bottom. We can't predict what price it's going to bottom at, but we can predict when it's going to bottom at. And that prediction says that Bitcoin will bottom in Q4, which means any time between October and December. And so going back to this macro chart we have here, we can see I've circled these yellow circles, 2 potential zones where Bitcoin will bottom out within that November to December timeframe. And what we can see is that essentially Bitcoin will either bottom out at this region here, right, at 17K, will come down for a double bottom at around 17K, right? Or it will go down to the nearest macro support at 11.5K to 13.5K, right, which is this green box here. Why 17K? Well, 17K is where the 300-week SMA is, and 17K is also where we bottomed out before, and so that is a support zone. So it's a potential chance that we see a double bottom rather than we see a drop all the way down here and then see a bottom and then come back up. See, we have seen double bottoms in the past. For example, 2018 was essentially a double bottom, not quite, but 2015 more precisely was basically a double bottom. And so, you know, it's not abstract at all for us to see a double bottom. And yeah, so I think that the highest price Bitcoin can possibly bottom out is actually a price that it's reached before, but it's just a retest of that price. And I think if we retest that price, that would probably be enough validation for me to say, okay, that was a Q4 bottom, that counts. You know, coming back down to the bottom and retesting it around Q4 or in Q4, that probably counts in my book as a Q4 bottom. But you know, regardless, I think that essentially it's either that 17K region for a double bottom, maybe slightly below, or that a 13.8K to 11.5K region. There's really no other region that I can see Bitcoin bottoming out. I don't think we'll go below 13.5K to 11.5K. You know, a lot of people say we have a CME gap at like 9,700 or something. Yeah, look, I think that's bait. I think that's a little bit too pessimistic. I really don't think we're going to get that low. Even if you're looking at the amount of Bitcoin that's lost, you know, Bitcoin that can't be accessed again because it's lost Bitcoin, that already brings the price up to like 2,000. So you like, you know, if you're going to say that, oh, Bitcoin's going to go to 9K, at some point you need to start using a little bit of common sense there. I really don't think that's possible. You know, how bad can the recession get? And that's what I'm saying here. I mean, we're already seeing 75 basis point hikes. You know, how high can they go with that? You know, I think the bottom is much closer than people would probably expect. And I think that once we lose this, you know, macro uptrending line, this pink line here, people will start to be really bearish. And I think that's when you start really accumulating, because that's when people start making irrational decisions and start 100x shorting for no reason. Yeah, but I think that essentially the bottom's going to be in Q4. It's going to it's going to be between 11.5k to 13.8k or at 17k. Don't know yet. But regardless of all of that, right? Because that's even though I'm saying all of this and I'm pretty confident about it, I'm still jumping the gun. Right? You shouldn't be shorting right now. You shouldn't be shorting. Why would you short at the bottom of a structure? You are on support. Stochastic RSI's bottomed out. You know, volume's crazy bad. I mean, if we go to Binance, for example, volume's crazy bad, but that's just one aspect, right? There's many aspects you can look at. I mean, that's strong red volume right there in that recent daily candle close. But yeah, essentially, like, you know, we're right on top of support now. I think you need to wait. I think you need to wait for something to happen clearly. I think you need to wait for a clear breakdown. We're on support right now. A breakdown would be, for example, maybe, you know, a drop below 20.7k. That's when you start, you know, getting a little bit bearish. But even then, you know, even when you lose that level, you know, I still don't think it's necessarily the perfect time to be shorting. Why? Well, I mean, I just showed you guys, didn't I? I mean, I showed you that, hey, yeah, if we lose the channel, we're going to go down to support at the macro uptrending line. And that's only down like 800 or 700 USD below the channel itself. So I actually don't think you should be shorting until we lose the macro line, to be honest with you. I think that you could maybe on very high leverage and catch a little scalp trade on, but like, you know, honestly, like, you know, we're still on support right now. We still will be on support until we lose 20k ultimately. And then from 20k, if we lose that, we're kind of just going down to 17. But yeah, until like 20k is lost, that's basically, you know, that's essentially support. Maybe even 19,900 would be the level actually. But yeah, essentially, we're on support with Bitcoin, right? Bearish structure, bearish things playing out. If we look at the macro, for example, oil prices are in a descending wedge formation, which is very bad because this oil price topping out here in June actually marked the top for inflation and led to a rally in the markets essentially. But now it's actually formed a descending wedge and it's looking to break to the upside, which is very bad, which means inflation might start rolling up again. And then, you know, looking at something like the S&P 500, you know, we've seen a big rejection from resistance. Right, strong resistance line rejected from it. We're probably going to be trending downwards towards the nearest support zone at around 4,150 to around 4,000 flat. And so, yeah, like a lot of this does rest on the macro situation. I've made myself very clear with that in the past. The macro really does determine a lot of this. But we look at something like the DXY as well. DXY started to pump again, started to take back its high that it's made in July here. Look at something like the bond yields, for example. Bond yields, again, getting very close to where they were back near the high. And so, yeah, the macro situation, it looks better than it did. And you know, that's why we saw a rally. But it's certainly not as good as what people thought it was going to be. You know, we're seeing probabilities for another 75 basis point hike rise by the day, I'm pretty sure. I think it's up to 56% now. Last week, it was like 20%. And so, yeah, the macro situation's worsening. And so, as a result, the risk on assets are worsening as well. But yeah, that's really the situation for Bitcoin right now. If we look at the 15-minute chart, and this is where I'd leave you off, the 15-minute chart's something you need to watch. I don't know if this is going to be resolved by the time I make the video, but this is actually the channel formation from a daily chart that I showed you. It's just zoomed up the 15-minute chart. We're actually forming a descending some sort of, well, it's not necessarily a descending triangle, but some sort of, you know, symmetrical triangle formation on this support line, and we're seeing a lot of weird stuff going on with the RSI. I guess you could say that's a bullish divergence in the RSI, but we do have that downtrending line. You need to be watching that because there is a chance that we actually break to the downside from this consolidation structure, and that would be a break below the channel formation. So thanks for watching, guys. I hope I've been able to inform you of the situation correctly here, as I've been doing for like the last year since 63k. So, you know, just you know, show some support, I suppose. Leave a like, leave a comment, whatever. Just boost the algo a little bit, and let's get going. Let's get this message on the road, and let's get people informed here. But without further ado, let's look at the V.I.P membership. So if you're interested in that, click the join button, and you'll see you got, you know, access to all this stuff here, access to all these perks. You can read it for yourself if you want to. But it's 28 USD a month, so less than $1 a day. Then you've also got 4 trading setups per week, prioritized reply to comments, a trading lecture, so a 2-hour market psychology lecture, and then also exclusive Telegram group access. Now, within the last 48 hours, we've had 5 signals posted to the VIP's trigger, one of which was a fake out. We lost money on that one. The other 4 of which are all accumulatively in about 110% profit on regular 1x short trades. If you're taking 10x short trades, that's a 10x. So look, pretty good stuff going on there, I'll tell you that much. Regardless of that, we've got the BitGet Exchange. Now, they've got a new feature that I wanted to talk to you about. You guys know BitGet, right? Half the fees are Binance. I talked about it before. Half the fees are Binance, non-KYC on a personal level, exchange systems in place to avoid exchange-driven scam wicks, and we've also got a protection fund now. So this is a new thing. Essentially, BitGet has put in $80 million US dollars and 6,000 Bitcoin into a fund so that if the exchange gets hacked, you can have access to insurance for at least some of your money, which is amazing, right? Because that's the biggest problem with exchanges. Keeping money on exchanges, they get hacked, you lose all your money. BitGet's taking steps to solve that. You haven't signed up to BitGet already, it takes 5 minutes, it's free. Do so using my referral link in the description below. I highly appreciate that. And then lastly, if you want to learn how to trade, the Crypto Academy courses, the Crypto Academy itself actually is a company developed by myself and Mega Crypto. We're teaching people how to trade from step 1 to step infinite here. You can read the bio on the website, or you can just scroll down, find our email address here at cryptoacademycourses@gmail.com, and we'll get back to you with all of the payment information and also a video outlining exactly what the course is so you can make an informed decision. Thanks for watching. Hope you enjoyed the video, guys, and I'll catch you in the next one. Thanks.